Welcome back. You're watching IndianOpen right here on BloombergQuint Live. Asia as a pack is looking weak this morning. SGX Nifty 2, no major positive signs coming in there. It's down about 1/3%. Yesterday's session saw us weaker by another 0.5%. So it's a truncated week. We're not going to be here on trade for Friday. So 4 days of trade is what we have to factor in. And the news flow coming in is definitely not positive to support any kind of buying, at least for now.
Yeah, now that the global companies have started talking about the impact that they're going to feel, one would find it difficult to believe that the market's going to shrug this off. So let's wait and watch. And, you know, the cases keep on piling up. We might want to see these numbers come off, but they aren't coming off in a hurry right now. So difficult to make a bullish case. But, you know, the LTRO, from a domestic perspective, that's a good announcement.
Yeah, and the kind of response that it's got is, you know, another thing to keep in mind. We'll try and, you know, break it down as to, you know, what this means with Mr. Bhaskar Panda as he joins us later on in the show, but also important to keep in mind what's happening in the derivative space. Agam Vakil is joining us right now to give us a setup of what's happening in that segment. Agam, good morning.
Good morning, Devina. Well, unwinding continues, and there are a lot of positions which are being unwound for now. Long positions made earlier. As you can see, 2.7% decline in open interest for the Nifty futures. The Nifty banking futures, the picture isn't any different. When it comes to the range, we're still stuck in that 500-point range, but for now, the Nifty may very well be testing 12,000. So we'll have to wait and watch as to where it goes. We're seeing a lot of writing around the 12,100 call now. Until yesterday, all the activity was around the writing of the 12,200, 12,300 calls. The fact that the writing activity has shifted lower, well, could be a matter of concern. But we must remember that the Nifty has come off in the past couple of days. Where is the India Volatility Index? Currently higher by 6%, about the mark of 14. The Nifty put-call ratio coming off further from the levels of around 1.27 to 1.1. Moving on to stocks, what are we watching? Well, Muthoot Finance had a staggeringly strong day. Of course, it advanced by around 17%, but there was a lot of weakness in IGL, LIC Housing Finance, and Mindtree. Of course, Mindtree's, pardon me, was advancing, but we did see shorts in IGL and LIC Housing Finance in terms of stocks which saw unwinding. Let's bring that up as well. We have Ramco Cement, Power Grid, and Manappuram Finance. It was a mixed day of trade, at least for the futures and options space, but there was weakness for the indices. It's a wait and watch whether or not we do, even if we do start on a negative note, should we see that weakness continue?
All right, Agam, thanks very much for that. So that is something that you need to keep in mind. Mayuresh Joshi, Head of Equity Research at William O'Neill India, is joining us right now on the show. Mayuresh, we've digested earnings. Yeah. It's behind us now. What I guess you know, we're on the lookout for is the severity of how much coronavirus can scale and the impact of that on domestic companies as well as you know, the global business.
Oh, absolutely. Morning, Devina. Morning, Neeraj.
Good morning.
So I think the entire focus is absolutely going to shift in terms of the global impact of coronavirus and the implications on a lot of sectors out here, right? So again, when you hear con calls for a lot of companies, auto component makers, for example, I think they're clearly indicating that if this extends for a month or 2 months longer, I think the disruptions in the supply chain are going to be very, very disruptive. So I think a clear indication has been given at 10-20%. That's the range that the hit can be. The other element also is the pharma companies, right? Because a lot of APIs which come from China, almost 80% is imported from China. So prices of few APIs like ibuprofen, paracetamol, have actually shot up, and these are critical components in terms of finished dosages for Indian companies. The third element obviously is also the stock for a lot of agrochemical companies in terms of imports that they probably do. I think the companies which are better off in terms of being backward integrated are better off in a scenario like this, because I think the pricing probably works in their favor because of the disruption. But yes, you're absolutely right. I think disruptions are here to stay. We're just hearing Neeraj say, right, a lot of MNCs have also started indicating, Apple, for example,
yes,
and so on and so forth. So there are disruptions around the corner. And yes, that will have a hit in terms of global GDP and how global trade functions. So I think the markets are probably trying to get a feel in terms of the kind of potential impact in terms of the economical implications that it might have.
I mean, SARS lasted from November to July, yes. So for 8 months. I mean,
yeah.
probably
Let's see. This one,
hoping for summers to come in a bit early, because
Yeah, that might just help dissipate this quickly. Cross fingers for that, Devina. Well, actually, and more to talk about this with Mayuresh Joshi, but since we're talking about disruptions, one company that has come out in the open and said that a major vinyl chloride monomer supplier has declared a force majeure during March and might have an implication on supplies is Finolex. Now, let's discuss the resultant impact with Anil Vabi, the Director of Finance at Finolex Industries. Good having you, Mr. Vabi. Thanks for joining in.
Good morning.
Can you tell us a bit about what kind of disruption could this entail, and what, if it's possible to quantify the financial impact of such a thing?
This disruption is because of an unplanned shutdown, because of technical fault in the plant. So the supplies will be affected for a month. So normally in a quarter, we produce about 75,000 tons of PVC resin. This will be short by 15,000 tons. So that will be the impact.
Okay. So this is on technical reasons, like you said. So we're factoring in just 1 month, right? So post 1 month, things will normalize and you'll get back to that 75 million tons.
Yes.
Okay. And in the meantime, the other segments, are they all, is there any impact in the other segments, or is this just one segment?
There will be no impact on the other segment, no. The pipe supply will continue to be normal. We will produce the normal volumes and we will supply the normal volumes.
What happens to the orders, sir, that have already gone out? And has the extension been given from the client side?
No, there will be no impact actually. Resin is available easily in the market. The imports are there. So by this shortage, there will be no disruption caused in the market.
Okay. But the overall production, if I just take into account the numbers that you gave me, sir, is about what, 20%, 75,000 and 15,000?
For the volume, 20%
for the volumes,
for the volume in the quarter.
Okay, so the simple question, I mean, and you would be the best person to answer this, does this have any impact on the overall FY21 annual sales? I mean, because
none at all.
None at all. So you're saying that you were not anyways essentially thinking of operating at 100% capacity for all the 12 months. So the remaining few months will take into account or compensate for the loss that you incur in the month of March.
Yes.
Okay, great. Good having you.
Thank you.
Mr. Vabi, thanks so much for putting that into perspective. So, well, viewers, keep this in mind. I think people tend to get disrupted these days by any kind of announcement around disruptions. It may not really impact Finolex so much. But Mayuresh, just before we get to the other big announcement, which is the media restructuring announced at the Network 18 group, just continuing with that conversation, there is an MK note, for example, which speaks about how some of the battery makers might benefit from this issue at China. And some of the specialty chemicals companies which are not very well backward integrated. And they have named, I think, companies like Vinati Organics, amongst others, Camlin Fine, amongst others. Now, you track this space very closely. Do you think the impact on a Vinati, a Camlin, or some of the others that you may have an idea of would be very severe, and will it show up quite strongly in Q4?
No, so as I mentioned earlier as well, right, a few companies like this, Vinati, for example, I think if you hear their management con call, I think the impact is supposed to be very, very minimal as per the management itself.
Okay.
Pai Industries, I think, an agrochemical player as well, I think, outstanding set of numbers in my opinion. Again, I think the dependency of China in terms of imports, and again, the inventory that they have is sufficient enough for Q4. But even if this extends beyond Q4, I think the management was very, very clear. They're just talking about single digits impact in terms of top line. So I think a few companies benefit significantly because I think the pricing pressures that will get witnessed by the other companies will be quite significant. So yeah, I think a few of these specialty plays can actually benefit from China disruptions very, very largely because export orders are also firming up for all these guys.
Okay, we'll talk about the media rejig in just a bit, but I think go across to our research team to outlay some of the other stocks and news that are at play, as well as a few more brokerage calls on some companies that have come out over the evening. Shefali joined them for that. But Nikki, first to you.
Yeah, sure. I'm going to start off with Jsw Energy, which has signed in a share purchase agreement to acquire 100% stake in GMR Kamlagar Energy, which is an enterprise value of 5,321 crore. At this enterprise value, the valuation definitely don't look cheap, but then it's a strategic fit given the geographical location, and the deal is expected to be value accretive right from day one as per the management comment. JSW Steel, which has been declared as a preferred bidder for 3 Odisha iron ore mines. And the notification, however, remains silent on the win of Jajang mine, which is rather one of the largest iron ore mine which so far has been auctioned and has a capacity of around 16.5 MTPA. Yet to see whether it's just a case of deferred communication or there is more to it. Huhtamaki PPL, where the numbers have come in, on the face of it, if you just look at the bottom line numbers, they look a good set of numbers. But then top line is just a 10% growth. EBITDA is flat around by 1.5%. And net profitability is up by 3.8 times. That is essentially on account of a tax write-back, which is to an extent of 32 crore, which has aided the bottom line performance of the company. We're looking at aviation stock. Domestic air passenger traffic has increased by more than 2% in January. Indigo here has maintained the lead position with 47.9% stake. SpiceJet market share has increased from 16.5% in December to 16.6% in January. Also, we're looking at HCL Tech, which has secured large contract from Fonterra Cooperative. The contract involves managing the entire technology infra for the company as a whole.
Right, Nikki, thanks very much for that. What are the brokerage reports that came out yesterday, Shali?
The first one is over on BHEL. So after the weak Q3 earnings, you're saying that the order inflows continue to remain weak in the first 9 months, and considering the fact that for FY20 on the whole, the FI inflows, according to them, are unlikely to exceed 30,000 crores. So execution becomes even more critical, and operating cash flows outflows continue, and they are estimating that BHEL can turn net debt by FY21. EBITDA margin improvement expected to be slower than they had earlier anticipated. So they are maintaining a reduced rating target. They've cut from 48 to 33 rupees a piece. The next one is Citi on Zee Entertainment. They expect a more subdued business outlook in the near term, and softer operating trends, and the margins may dip to below 30%. Receivables from Dish and Citi would remain a key monitorable going forward, and execution is the key on various things that the management is talking about, which includes board reconstitution, which may happen in the next few months, and improving cash flows, changes in the Treasury investment policies. So all these would be important to keep an eye on, and they're maintaining a neutral rating with target at 260, which has been cut from 280 earlier. And the last one is Morgan and Gsw Energy. So they are saying that the company's ROE and EPS accretive growth potential has started to play out, and consolidation of Kamalanga would increase company's EBITDA by 27%, EPS by 9%, and raise net debt to equity slightly to 1.2 times versus 0.76 earlier. So they are maintaining overweight as of now, target 90 rupees a piece.
All right, guys, thanks very much for that. So keep an eye out on all of those names. Add to that list is obviously the list of, the Network 18 stocks. So you've got Network 18, you've got Hathway, Den, all of these to watch out for. Mayuresh, come in on this piece, the consolidation that's happening. Obviously, it's going to work well because it'll create a leaner, corporate structure. Talking of net debt-free company with a solid base for growth, do you think this will go well?
So yeah, I think it was in the works, right? Because I think the consolidation and the restructuring exercise that has been done, I think the accessibility in terms of different segments is now far more feasible through one single entity. Having said that, again, I think looking at the swap ratios, Hathway and TV18 definitely benefit, and with the kind of exercising or the restructuring that they've probably done, Network 18 obviously reduces the holding discount. So yeah, I think it's sort of positive for all these companies taken together.
The only thing is, Mayuresh, I just want to ask you that from a swap ratio perspective or from the fact that the holding company discount goes away, so from a technical perspective, all three companies tend to benefit. The question is fundamentally, media business is not quite making money, right? Sure. We've seen Sun TV, Zee, and Zee has issues of its own, but Sun TV as well. Yeah. ENIL talking about pressures on the radio business. Is there fundamental sense in trying to own these companies in a big way? even though it may be a really large media conglomerate, or would you believe that there are better businesses to bet on?
No, I think the businesses will take time because what they have gone through, I think, and if you combine all the factors that you've put through, I think ad revenues is a substantial portion for media business. You guys know it better, right? And that has probably come off significantly. For the print guys and the radio guys, I think it's more the diversification in terms of small businesses, local businesses, how FMCG companies are willing to spend. And that creates a huge multiplier impact in terms of how ad revenue growth is seen going forward. The subscription growth for a lot of these broadcasters, I think, have been on the softer side. So whether you call it because of the tariff order or the new tariff regime which has come through, again, I think the benefits are there to be seen as they try and entrench further in terms of market share gains. There is elements of consolidation happening within the industry itself. But I'll still wait it out. I think the softness in numbers still continues. I think it's better to wait or stay put, wait for a quarter or two, see how it goes, and then probably take a call. The interesting data point, however, is that I was reading through a couple of media reports in terms of the ad spends which are expected to come through. So television, I think, is going to get the maximum chunk, followed by digital. So I think the disruptions, as you're pointing out since morning, I think the digital part of the business probably is going to see significant money coming in through ad revenues. And print probably comes third. So you can see the kind of disruptive impact that is probably going to happen in terms of the channel effects, if I would call it that way.
I think more than the business, this probably creates a leaner structure. It impacts the cost side of the business, probably not the revenue side of the business.
And the valuations maybe,
yeah. So then it probably is setting up for a better time to come.
If indeed times do come about, yeah.
Brijesh Bhatia, research head at Dealmoney Securities, is also joining in right now. Brijesh Singh, senior technical analyst at StockAxis, is also here with us. I'll start off with you, Brijesh Bhatia. First, your call on the index, most likely breach of 12,000 in today's session. Would you be a buyer?
Yeah, good morning, Devina. I would definitely be a buyer on Nifty in case today it's opened around 12,015.25 on the future side for a couple of reasons. First, if I just look at the derivative structure, we have seen huge writing coming into the 12,000 put, so which will act as a support zone. Not only the current week expiry, even if you look at the next week expiry, we have seen writing at around 12,000. So both the monthly and the weekly both are indicating that 12,000 will minorly act as a support zone. Second, if I just look at the 50 days average on the Nifty, it's scoring around 50 days average, and yesterday's low was around 50 days of average. Although we are slightly opening on the negative side, but I think 50 days generally Nifty has a tendency to hover around 0.5% of the 50 days average and give a swing momentum. Third, if I just look at the gap, which has the gap of opening, it has a gap at around 12,015, 12,020 zone. So I think with the multiple technical support, derivative structure, I think we might see a good positive momentum from a trading point of view. Still on a broader picture, 11,950, 12,400 stands out to be a range for Nifty as of now. But trading point of view, I think by Thursday expiry, we might see again 12,160, 170 on the upside. And till 11,960 is not breach on the downside on the futures, one can take a long bet with the stop loss of 11,959 and look for 12,164 on the upside.
Okay. Brijesh Singh, what are your call on the indices, Nifty, Nifty Bank?
Good morning, Devina. See, regarding with the Nifty has been concerned, no doubt the hourly chart and the oscillators are been trading in the oversold zone, but the price charts has not been given any confirmation of a reversal as such. Still, as been talking previously in your shows and other business channels, that Nifty is looking weak, and I am looking Nifty would be breaking 12,000 level, and the previous swing low was somewhere around 11,998, taking a Nifty spot value. We might break that level and we might drift more towards the downside. Regarding with the Nifty has been concerned, first of all, I would be going, suppose Nifty opens flat or any rise, if it comes, then one can go on a sell side, somewhere around 12,080 zone. If it trades, then play with the sell side with the stop loss of 12,170 and pay for the target of 12,970. Even the target can be extended to the level of 11,920. In coming days, might be in a couple of days has been concerned. Regarding with the bank Nifty has been concerned, 30,500 to 30,600 is a support zone, but that would be breaking, because ideally twice or thrice it has been touched and after it has bounced back. That indicates the pressure might be drifting down. So present rate of any rise till 30,800, if Bank Nifty trades in spot value, one can play on a sell side with the stop loss of 31,150 and look for the target of 31,100 or 30,100 to 30,200 odd level. So both the indices look weak to me. Any rise should be used to going short in it.
Okay, so in light of that, Brijesh Singh, I'll come to you first. What are, if you are indeed betting on weakness, what are the stocks that you're recommending today?
Are there, Neeraj, both on the sell side. The first call is the BPCL. The stock has been trading with the downward channel slopes on the hour, which has high low formation has been maintained, which indicates the probability of moving more downsides. So in yesterday's session, it got close somewhere around 462. Present rate or any rise should be used to go short in it with the stop loss of 470. Play for the target of 450 ideally, and for a couple of days even concerned. Even the target can be extended to the level of 442. Second call is Apollo Tyre. The Apollo Tyre, the previous swing low has been broken with the increasing volume. So ideally it should not break 162 odd level. Yesterday it was broken and it got close around 156, which indicates the more selling pressure would be coming up. So present rate earning rise should be used to go short in it with the stop loss of 162 for the target of 145. Time frame to hold the counter would be a couple of days trading session.
Okay, Brijesh, Bhatia, what about your stock ideas?
I would go one long and one short because if you look at the momentum on the mid caps are on the positive side. So I think I would go long on Torrent Power. If you look at the stock has managed to cross 320, and if I just look at the previous range, it was hovering right from 270 to 320 for quite some time. And if you look at the last 2 days of volume, we have seen huge volume coming on with the price breakout above the previous resistance of 320. So I would take a long bet at 329, keeping a target of 352 on the upside, and stop loss can be placed below the resistance, which was around 320. I would take it. It will act as a support now. 319 would be my stop loss. My second bet is on Bata India short because if you look at the structure at the higher level, it's a slow and steady distribution. Plus, if I just look at, we have already seen RSI negative divergence in the Jan momentum. Even in the Feb, stock has managed to hit new highs, but RSI was unable to hit the new highs. Now, if I just look at the short term on the hourly chart, prices managed to break down its rising trend line, the support rising trend line, which was holding for quite some time. So at around 1791, 1792 on the futures, one can take a short bet, giving a target of 1715 on the downside, and stop loss can be placed at 1831.
Okay, got that. Let's also bring in Yash for our special segment Bloomberg Edge, where he talks about a pattern that the Bloomberg terminal has thrown up on a particular stock. Yash, good morning. I believe it's Adani Transmission that we're talking about today.
That's right, Devina. We saw a big fall of almost close to 4% in yesterday's day of trade. And with that, the trender indicator is suggesting that we could see further weakness coming into the counter. But like we always do, let's first try and understand what the trender indicator is and how do you interpret it. The trender is a Bloomberg proprietary indicator, and it basically uses the average true range for the purpose of generating a buy or a sell signal, and also helps you manage your stop loss. How do you interpret it? You go long when the trender line changes its color from red to green, and you go short when it changes its color from green to red. When does this color change happen? When the price closes above or below the crucial mark of the trender. And in the case of Adani Transmission, we've seen that the price has managed to close below the mark of the trender. So the green line, it had been flat for a very long time, and then we saw in the last trading session that the stock closed with losses of almost 4%, and it has given that negative crossover. Additionally, if you take a look at the trend in which the price has been moving at first, and this is over the daily time frame on a 1 year period, we've seen that the stock was in a sideways trend up until September of last year. After that, we saw a big breakout coming in, and it gave a multi-year breakout at that, and since then it has been in a sideways trend again, and now we are seeing some amount of weakness coming in as well. So we could see further pressure. At least that is what the trender indicator is suggesting.
All right. How well has this worked in the past, Yash?
Devina, it's worked fantastically, because 4 out of the last 5 times that the trender has given a negative signal, the average closing returns on a 1 month basis have been upwards of 11.5%.
Okay, got that. Thanks a lot for that, Yash. That's Adani Transmission, Bloomberg Edge for you. We were also earlier on talking about the results of the FMCG companies, staple companies, and how they've been impacted this quarter. What would you do, Mayuresh, if you did have some idle money lying where you wanted to deploy and no consumption exposure in the portfolio? Would it be a right time rather than to have that exposure?
Yeah, it would, because time and again, I think we have been discussing how the Rabi season has been, right? And the consumption multiplier obviously has deteriorated because rural consumption has actually grown at 0.6% compared to 1.5 times of urban. So to that bit, again, the expectations of a good Rabi harvest, the expectations of realizations growth coming through at the end of Q4 will prop up volumes and expected price volume realization as a leverage on FMCG or staple balance sheets. However, I think input costs have also risen significantly. So if you look at, say, for palm oil futures, I think those prices have shot through the roof. Milk prices have gone up by 3 to 5 rupees a litre. Sugar prices have gone up. So it's an automatic reaction that they will pass this through, and how much of an impact does that have on volumes is interesting. But again, I think to probably look at the sector as a whole, I think we find it very, very interesting. I think paints as a segment, in my opinion, should do well. So I think we are doing this interesting piece in terms of post-result analysis, Asian Paints versus Berger. And the kind of growth that Berger has exhibited on the top line and bottom line compared to an Asian Paints has been significant, at least for the 9 months for this fiscal year. However, I think with new capacities coming up and expectations of asset turns actually improving for Asian Paints, EBITDA margins relatively better, crude derivatives coming off, are a significant component for input costs. And obviously the element in terms of return ratios, I think, remain extremely strong for Asian Paints. From a valuation perspective, I think it is trading at a 25% premium to Asian Paints at this point of time. But obviously Asian Paint is a leader, so our methodology absolutely suggests sticking with leaders, sticking where earnings momentum is. So yes, as a theme, our Cancelim methodology is actually throwing up Asian Paints to be a very, very good bet within the consumption space.
Well, it'll be interesting. I read somewhere on social media yesterday that JSW is entering into the paint segment with some brand called Halo, and the pricing is very disruptive. And let's see if that can happen. Sorry, you want to make a point?
So I think
there was an issue with the Competition Commission with JSW itself had raised regarding against Asian Paints.
Exactly. So that's one element of it. The second element is obviously, even if competition comes through, right, the paint segment is divided into 3 segments. So distempers is where the high-end paints are, emulsions where the mid paint segment lies, and obviously the lower segment. So I think the category that a lot of these paint companies will cater to will be targeting on the emulsions part. Asian Paints is more or less distemper. So I think repainting demand expected to go up, urban demand expected to hold, and rural demand expected to catch up. I think market leaders will catch up on the earnings.
And maybe that's why, despite the last decade of falling return ratios have not deterred the P multiples. I mean, the ROC of Asian Paints has come off quite dramatically in the last 10 years, to be honest. But people are valuing growth in a different fashion right now, and especially companies which are throwing up good cash flows. So maybe that's why this works beautifully for Asian Paints. The other big mover, or the big newsmaker rather, it's not been moving that much, but the big newsmaker is the power deal that has been struck between JSW Energy and GMR. Now, have you looked at that, and does it benefit the seller or the buyer? The seller because they get some money to repay debt or whatever it is, and the buyer because they get an operationally asset which is accretive from day one?
I didn't look at the granularities of this obviously, but the way I look at the sector is that the realizations are obviously come off significantly. The second element obviously with this acquisition, and obviously I need to see that piece very, very frankly. But again, I think it's not something which is going to be accretive from an immediate perspective, right? So I think one needs to really look at this from a granularity perspective and the valuations as well. So I think the enterprise value, as I see it on the screen, 5,321 odd crores. I think one really needs to justify that from a realization and the end user perspective as well. Take it with a pinch of salt.
Okay, let's wait and watch what happens. Remember, for GMR Infra, it might be a bit of a positive as well. They get some money, much desired money. The Tata deal hasn't quite happened as yet. So this might be a shot in the arm, but too early to say. Okay, Brijesh, since you're bullish on the markets, Brijesh, Bhatia, I want to come to you with 2 or 3 names which did very well in trade yesterday, and if you have a thought on either of these or any of these. Midhani up 20%, Muthoot Finance after the numbers went up 17%, or a Fairchem Specialty Chemicals which went up 15% after a 10% up move the previous day. Any one of these, Brijesh, Bhatia?
I would stay with Muthoot Finance because if you look at the even if you look at the monthly structure of the stock, it's been consistently on a positive side, and we haven't seen last 3 months on a negative side. Even if I just look at the 1 month, which was I guess November, it slightly ended on a negative, but it still managed to hold the previous lows. So I would stay with the long for the target of around 1100 on the upside. This is purely a longer time frame. I'm not talking from a trading point of view. I'm looking for 1100 on the targets, and if I want to look for a short-term point of view, one can look for a 918 on the upside, where this momentum might take a pause. A dip kind of retracements can be seen, but overall, I'm looking for 1100 on the Muthoot Finance.
The other one that stayed resilient in yesterday's session was Titan. It was the top gainer on the Nifty 50. And post its results, the stock has been holding steady ground. So 1316 for Titan now. Brijesh Singh, would you be a buyer in Titan?
See, hourly as well as the daily charts, both are indicating for the stocks to move up. Yesterday's session indicated more of an upside. So 1316 around the stock got closed. So if someone wants to look out for a bullishness, then I would be suggesting keeping a stop loss of 1295 or say, or even 1300 can be kept, and look to buy at the present rate and play for the target of 1330 to 1335. It is hardly 15-20 rupees upside. But if it give closing above 1330, then we might try to see stocks making a new 50-week high also, or even it can try to touch a level of 1400 to 1420. So ideally, I am just waiting for 1330 to be broken on a closing basis. Then another say 70 to 80 rupees on upside can't be ruled out.
Okay, just a quick word. I think the other one is from the mid-cap space that's been holding, doing pretty well in terms of share returns has been relaxed. So I think yesterday it closed at 815. Quick word, Brijesh Singh on Relaxo.
See, Relaxo is a disclosure we have recommended to our clients also on long back, somewhere around 400 below that level, and still we have been holding. The stock is very good. If someone wants to play for a short-term bet, then 780 is the support, keeping that thing, and the stop loss present rate can be used to go long for the target of 855 to 860. But I would be suggesting the stock is in a secular bull run, so keep it for a 1 year time frame. We might see a 4-digit in a 1 year time frame.
4 digits. Yeah, that's $200 away. Watch out for Relaxo. SGX Nifty and pre-open rates up on your screen. Nifty 50, slightly more volatile this morning. You've got a 1% cut on the Nifty, while a 1% gain on the Sensex. So not really prudent to sit and dissect the index moves right now, but individual stocks and what's happening out there. So starting off with some of the losers then. IT, which stayed in the green yesterday, seems to be the bigger losers of today. Tech Mahindra is seeing an unnatural 10% cut. We'll wait for this to come off. Infosys is showing a 5% cut. Bhatia Airtel is down about 3%. Remember, all of these telecom companies have started making their payments towards their AGR dues. Hindalco is down 1.25%. NTPC, Wipro, Vedanta, Kotak Mahindra Bank are all down about 0.5%. Maruti Suzuki too is looking slightly weaker this morning. That's trading somewhere closer to 6,886. Britannia, Yes Bank are losing out, but marginal cuts. What's gaining is GAIL. That's at 120. JSW Steel is open up 1%. Zee is up 1%. Bajaj Finserv, Reliance Industries is up 0.5% at 1485. Then you've got HDFC Limited up 1/3%, along with Asian Paints, which Mayuresh likes. That's up about 1/3%. For the currency, we're at 71.41. So not too much in terms of movement of the currency for the last 2-3 weeks. It's just in this range of about 71.35 to 71.4.
Okay, just very quickly, just before we get to Mr. Bhaskar Panda, I want to mark the Network 18 family. For now, it looks like all of them will start off marked up. So Network 18 is up 5%, but Hathway, TV18, Den Networks, all of them up and about in trade. By the way, it's also got a resultant impact in stocks like HT Media, which is about 11 to 12%. But these are early days. Let's wait and watch for these rates to settle down. Wait for these rates to settle down and then talk about this more. But media as a pocket might be an interesting one in the session today. So do watch out for this one. Do watch out for JSW Energy and GMR Infra as well. But yeah, the big news of the day, and we'll get the bond yields up in a moment from now as well, but the RBI has infused over 25,000 crore rupees through its first long-term repo operation yesterday. The bids exceeded funds on offer by nearly 8 times at 1.94 lakh crores. Bhaskar Panda, Senior Regional Head, the Treasury Advisory Group at HDFC Bank, joins us on the phone line. Mr. Panda, thanks so much for joining in. This shouldn't surprise anybody that the bids are so high simply because of the rate differential, but the first successful offering done, and I think one more one-year operation coming up next Monday as well from what I hear. What do you make of this?
See, this is the stated way of RBI trying to further transmission to the corporates. Yesterday, it was no surprise that it would be oversubscribed because this is the first tranche of the Reserve Bank, and secondly, if you see, most of the people are sitting excess SLR, and this gives an opportunity for them to, kind of cash out and maybe make some money on this. Third is that, liquidity is quite high at this point in the time. So, therefore, I mean, if you want to deploy, you can deploy. And fourth, state government loans are coming for auction, so you can have a play there. But having said that, there is one more thing, which is that what should banks do by borrowing so much of money, even if it is at a cheaper cost, if they are not able to deploy in the real market, that means in the loan market. So ideally, that is something which needs to be further delved into and see what is going to happen. Otherwise, yeah, this is a win-win situation for the banks.
Just looking at the kind of appetite that the market has and the quantum of the bids that have come for this tranche, Mr. Panda, do you feel that the quantum could be extended a bit or increased a bit?
I don't think. See, as I said, this is the first time they had come to the market, so. Obviously, the bids will be higher than, at any point of time. Maybe the second tranche, when they come for the 1 year, we'll see demand tapering out there. Then it will give us an indication how much more demand remains. But I have still little doubt on the applicability of these funds in the in the loan sector. That I really don't know as of now how that is going to help banks or how that is going to help banks to give money to the sector. So that's something which I think we need to wait and see.
And that's probably the primary purpose of this. But Mr. Panda, thanks very much for joining in. Appreciate you taking out the time. So while the demand looks strong, the first tranche, maybe it may not remain when they come back to the market.
No, I doubt that. I mean, you give money at such a cheaper rate, any bank will come out and do that, right? You don't have to then raise more money through fixed deposits or otherwise. So I doubt
but if you don't have applicability of those funds,
I'm guessing that's a 3-year term. You would probably bet on this, not necessarily just from a next 3 months perspective, but at some point of time, the money being put to use as well. So I don't know. But let's wait and watch. For now, let's focus on the here and now. Media as a space, as we said, is doing rather well for itself. Hathway, TV18, Den Networks, all of them up and about. And as I said, HT Media too is showing some signs of an uptick. So pretty interesting moves there. Most of these will start off higher. Brijesh, Bhatia, I don't know if you looked at the charts of any of these companies, but since they're in focus, would want to ask you about them. Network 18, TV18, Hathway Cable, Den Networks. Have you looked at the charts of any of these?
Yeah, I think I will go with Network 18, even if it's opening higher, because this is the one stock which is still forming the higher low formation right from around 20 levels, which I've seen a rally. Still, the previous swings lows I haven't breached, and I will keep a stop loss of slightly 28, which is slightly deep, though it's opening at around 30 levels. 28 would be the slightly lower stop loss, but I think till 28 is being held, which if you look at yesterday's open low was same and closing at higher levels. So I would take a stop loss at 28 and look for around 36, 37 on the upside.
36, 37 on the upside. Well, let's wait and watch. By the way, Yes Bank comes out of the FNO ban, so you got to keep that stock at the back of your mind. Up marginally in trade. Let's wait and watch if that one reacts further. The one that has really been clobbered the last few days, weeks, is Mahindra & Mahindra, down about 1% in today's session as well. Mayuresh, there was some story about how the newer tractors from October will have to have a glass cabin, etc., all of which increases the cost too. So that's an added negative. But the fact that the stock has come off so much compared to any of its peers in the tractor space or otherwise, would you look at it, or is it down for a reason?
I think two elements to this. The first element obviously is that the numbers were a little bit softer on a consolidated basis as well, including MVML. So the UV part of the business, how the entire transitions happens from BS4 to BS6, because the large portion still remains diesel with these guys. The kind of discounting that they'll have to do and the kind of price increases they'll have to take for BS6 variants, they'll obviously have an impact in terms of how volume activity will play out. The second element in terms of their farm equipment business, which is the tractor business, right? And if you compare it with its peers, Escorts, for example, had a very stable run in the quarter gone by. Unfortunately, I think the emission norms that you're talking about is applicable for 50 HP plus coming October.
No, not just the emission norms. There was a Times of India article which said that the new tractors for driver safety will need to have a proper cabin, glass windscreen, etc., 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 all of which is a cost enhancer.
It is. But I think the portion that they probably also have in terms of the mix, 50 HP and less than 50 HP, I think that is also going to have a significant say. The second element obviously is that as you're expecting BS6 pre-buying, right, there will be pre-buying that will happen even for the tractor front. Now with a good Rabi season, the expectations of the Doppler estimates are actually suggesting that rainfall will be quite normal this time round as well. So there is expectations that with realizations coming through for Rabi, I think the farm equipment part of the business should improve. But I'll still prefer something like an Escorts if somebody is hanging on to it, to hang on to that stock. Because what they've probably done in terms of the mix that they've got for farm track and power track, which is their above 50 and less than 50, the mix has largely improved greatly in favor of the less than 50 HP tractors that they've got. The realizations probably are expected to remain extremely stable, and the construction part of their business is highly underutilized at this point of time. So if infrastructure activity, as one presumes and assumes, will pick up, I think they might significantly benefit in terms of the fixed cost absorption for the construction business actually playing out positively. And the Railways is doing wonderfully for them. So I think 450, 500 crore order book, brilliant EBIT margins. And the balance sheet also does not have too many issues. So I think we discussed this in the past as well. I think if you've got Escorts, continue holding.
Okay. Anything else that you like, Mayuresh? We were talking about solar industries.
No. You're actually having a look at that stock. But something that we like at this point of time is Pai Industries that we spoke about in the morning, right? Post the results and post the con call, I think the top line growth was 20%, the EBITDA growth was 25 odd percent. They're also looking at a capital raise of 2,000 odd crores. So the organic, inorganic route they're probably pursuing beyond agrochemicals, I think that is something that will work in favor of these guys going forward. The CRAMS business, which accounts for 74%, has a brilliant order book size. So I think the execution thereof, supply side constraints in China are obviously going to benefit. And as I mentioned earlier as well, they're probably looking at different segments, maybe pharmaceuticals, nutraceuticals, which can be a huge value add going forward and a huge balance sheet plus as I see it. Debt equity absolutely minimal on their balance sheets. Return ratios are very, very solid at 20 to 23 odd percent. And what you're looking also from disruptions of China, as I said, that will be single digits even if it happens beyond Q4. So I think this is one stock that we are probably looking at. It perfectly fits our cancel methodology in terms of earnings growth, institutional ownership, leadership that they probably got within the space itself. And again, the return ratios, which is higher than our 17.5% mandated level that we got.
Okay. All right. We're just minutes away from market opening. We'll tell you all that you need to know to stay ahead in trade today. Reliance Industries is consolidating its media and distribution subsidiaries under one roof by merging TV18 Broadcast, Hathway Cable and Den Networks with Network 18 Media and Investments.
24 bidders submit expressions of interest for full or part of DHFL's businesses. KKR, Bain Capital, Arcil, Oak Tree Capital and a few others are in the fray.
Jsw Energy signs a share purchase agreement for 100% stake in GMR Kamalaga Energy for an enterprise value of 5,321 crore rupees. The management says the acquisition's value accretive from day one.
JSW Steel has been declared a preferred bidder for 3 iron ore mines in Odisha with combined resources of 1,092 million tons.
Huhtamaki BPL reports a 10% top-line growth in the third quarter, while a 32 crore tax write-back is the bottom line.
And lastly, in key brokerage calls, Nomura has cut the price targets on BHEL to 33 from 48 rupees owing to weak order inflows in the year FY20. Well, That stock certainly been caught on the wrong foot a number of times. By the way, Vodafone Idea corrects a bit in trade today. NMDC, Nalco are amongst the metal names that are also correcting in trade today. Frankly, save for media, I don't think too many other stocks have done really well on open. Jsw Energy, though, is up about 3%, so keep that at the back of your mind. But it's all media. Hathway, Den, TV18, HD Media, Network 18, TV Today, Jagran Prakashan. That's the clutch of names that have done very well in trade. Mayuresh, just a quick thought, a quick follow-up, and that is on IRCTC. There's a bit of a pause after a really good run. Would you use this as an opportunity to buy?
No, so we just came out with a very interesting take on IRCTC and DMart both, right? And we tried to compare that with the outstanding show that our cricketers have got. So, Sachin and Virat Kohli, right? So the outstanding show on the cricket field that they have displayed over the past so many years, I think these guys, Poros's listing, have not seen anything which might be boggling in terms of either a drop or something like that. So they've defied gravity in every sense. So again, the business model is working absolutely fine in terms of the catering business. The kind of online orders that they're getting have improved significantly. What you're seeing in terms of the online ticketing, again, that's a cash cow because the EBIT margins there are huge. Anywhere to the tune of 80-85%. They've launched a third train, which the PM probably inaugurated yesterday, right? So the Tirth part of the business, which is the pilgrimage part of the business, is also expected to pick up. And again, the kind of cash flows that they probably throw out, I think it's stupendous at this point of time. So I think it's just moved strength to strength, waiting for some point of an entry, but I think it's moved far, far higher from our pivot levels. So I think as Sachin is the demigod of cricket, right?
But if we expect the growth to continue, then even this should not be a hindrance, right?
It might, right? Because
year-on-year growth.
So the interesting part, Devina, is the valuation, right? The day they listed and the day that they closed, right? The valuation had become 70 odd times for IRCTC, right? Now they're trading at a valuation of 130 odd times in terms of price earnings. So it's not cheap, right? Sorry, around 70 odd times. DMart is around 130 odd times. So it's not cheap by any sense. But the growth is still expected to come through. Now, competition will come through on the private line, but that's still going to take time. So my sense is that it's a stock that if one owns, should own, it's way extended from our pivot levels that we've got.
Mayuresh, we'll take a moment to thank you for joining in today and giving us your thoughts. Really appreciate your time this morning. To both the Brijeshes, please stay on. We'll take in your top strategies post-market open because it's just about 10 seconds away from market open. So we'll have to do that calls just immediately post-market. But it might not be a bad idea today considering that we're likely to start off flat. So we'll do that in just moments from now. But 10 seconds left and keep in mind, on the gaining side, it's all about media. Otherwise, even on the index, stocks are largely unchanged in the pre-open session. But here are the first rates, and it's a very flat start. About 22 odd points lower for the Nifty, 2630 now, 0.25% lower for the Nifty 50. Sensex about 0.25% as well. The Nifty Bank is quickly down about 0.4% at 120 points. So there is weakness. It's not a flat start. And let's get the mid cap and the small cap indices on your screen and try and show you what's happening there. The small caps start off with a bit of green, but the mid caps about 0.33%. The small caps actually very flat as well. So overall, the breadth doesn't seem to be very promising at start. Pretty similar to the kind of breadth that we had yesterday. Look at this. It's a large tick of red, very little green. I mean, Zee, SBI, Grasim, 2 or 3 names which are barely up in trade. Otherwise, the sea of red is very large. Yes Bank corrects 2% lower. Remember, out of the F&O ban, so maybe fresh positions can be taken on open. NTPC, Tata Motors, Hero MotoCorp, ITC, Britannia. So clutch of names correcting together. We don't have a single large sector which is correcting, but a clutch of names which are pulling down. And well, that's just likely to ensure that maybe on open, the markets might just stay soft. If only these stocks were to recover, then we might have a bit of a green. But no concentrated losers or gainers. The big one from the morning on the Nifty has to be Yes Bank, quickly sliding down 3.5%. Do watch out for this one. What about the broader end of the spectrum? Well, as we said, that media is clearly the focal point of today's session. So look at what's happened to all the media invest stocks. So the network 18 group stocks, network 18 up about 5%, TV 18 12.5%, Hathway locked on a 20% upper circuit, quickly moving out any kind of arbitrage that could have existed. There's a 15% arbitrage with this move. I think that gets corrected very, very quickly. What about the other pockets, some stocks which are in focus? Mass Financial at had a 13% downtick yesterday, starting off slightly stable. But Midhani and Muthoot, both of which had a fabulous outing in trade yesterday and trading near new highs. Midhani up another 5%. Muthoot Finance lying a bit low. But Midhani, very strong move out here. Devina, what are you spotting?
An idea for one continues to crumble, and the stock now is sub 3 rupees, so that's about 11.7% under. Jsw Energy posted share purchase agreement to acquire 100% stake in GMR Kalamaganga Energy. That is up almost 6%. DHFL, I mean, that's obviously, we're not really too concerned about the stock price move, but nonetheless, the stock's up about 5%. And Reliance Industries, we spoke to the management about the force majeure that they instilled, and the stock not reacting much. The management clarified this is not going to impact their overall earnings for the year. It's just a temporary shutdown that they're seeing. 551 on Finlex. Other losers include the likes of NMDC, which is down 5.5%, Gayatri Projects down 5%, Nalco is down 4.5%, Lakshmi Vilas Bank, Shilpa Medicare is down about 4.5 odd percent. The stock has done nonetheless very well over the last few days. Then you've got Hindustan Copper, Eros International, Indiabulls Real Estate, Adani Power, Adani Transmission also, which is looking weak today. Remember, we spoke about Adani Transmission in Bloomberg Edge. Yash spoke about it and spoke about the weakness in the stock. And it's down about 2%. And we already spoke about how the gainers are in the media space. Other gainers include the likes of First Source, Thyrocare, which is up 1%. Ipca Labs has moved up. Castrol India is up. Edelweiss has moved up 1 odd percent. And then you've got the likes of an Inox Wind, Fortis Healthcare, Satpab Engineering, some of the other bigger movers in trade this morning. Breadth of the market, negative, without a doubt. Just about 350 stocks advanced, 800 stocks have declined, so more than double the number of losers versus gainers. Let's get into those top ideas from our technical experts. Brijesh Singh, I'll come to you first. Your top call for the day.
BPCL, go for a sell side. I think if I'm not mistaken right now, it's quoting at 457 or 458. Go with the sell side with the stop loss of 470. Play for the target of 450 as the first, followed by 442.
Okay, Brijesh Bhatia, what about you?
I would take a long bet on IOL, chemical and pharma. If it's trading at around 211.50, one can take a long bet on dips to 210, keeping a strict stop loss of 205 and look for 222 on the upside.
Okay, we leave it at that, gentlemen. Thank you very much for joining us this morning with your thoughts. Nischal Maheshwari, CEO of Institutional Equities at Centrum Broking, is joining us this morning. Nischal, very good morning to you. What is the call at Centrum, and what's your own prognosis of what is happening in the markets currently? We're sub 12,000 now on the index. Primary factors driving this kind of skepticism, obviously, being the global impact of coronavirus. But what is it that you're going to be watching out for?
Morning. I think market is underestimating the impact of coronavirus, and I think they have started slowly realizing it when companies have started coming out with warnings. It was Apple yesterday. I think day before yesterday it was locally Hero Honda, which said that their production is going to get impacted. A few days back, I think Hyundai closed its plant in Korea. So I think it's a much wider basically impact that the world is now started seeing. I am very sure basically I think this current quarter is going to be impacted across the board basically for all the companies which are anything to do with the global supply chain. So those things I think the market and the world is now started looking out for. So I think that's where the sentiments are. Locally I think Voda's expected demise, I think that once again raises the question basically saying that long established businesses are getting disrupted in this new environment. So I think people, that's why people are cautious.
So do you then think, Nischal, while Q3 was a probably flat quarter in terms of earnings, expectations before coronavirus were that there would be some recovery in Q4, pressure built up on Q4 earnings, but that might also not follow through, and therefore the full year earnings growth will look that much more weaker?
Q4 will be okay basically because most of the people would be having some amount of inventory, because it was Chinese New Year and people do build up inventories. Basically, my interaction with most of the companies make us believe that I think everybody seems to be okay till March. But I think this is now going beyond March, very sure. I think so. That's why in anticipation that the coming quarter, not the current quarter, but the coming quarter will have its impact. So typically it takes around 35 to 40 days from a cargo leaving Chinese factory to arrive at an Indian factory. And if you have got 3 weeks now, China is closed, maybe another week or two, it will be closed, and there slowly it will pick up. I think that impact will happen in the next quarter. We have already started seeing prices going up. If you're not in this kind of environment where you do not have pricing power, to pass on costs would be very difficult for anybody. So I think profitability and sales both will be impacted next quarter. Yes, earnings will be impacted next quarter.
This is very important, Nischal. So we are looking at the economy not really blooming, and we have this technical issue, and not just for India, world over as well. Would you reckon that we might have a challenge up until the festive season comes up, because there might be a spate of periods, or this a series of periods wherein we might get bad news either on earnings, or if this coronavirus issue gets extended for beyond March, as we all expect, and we don't know how much it will come, and maybe global companies and global economy too going through that. So the possibility of good news is far lesser than the possibility of bad news, and therefore would it mean that markets might actually continue to languish broadly?
So I think markets would be mostly polarized, and that's what is going to happen. So yes, it will just keep on moving in a very narrow range, but largely in stocks basically which we've seen in the last year, 1 year doing well, I believe that at least for the next 6 months that seems to be right. So all the calls on recovery in mid caps and recovery in small caps, I don't think so that's happening in a hurry. That's been my view, remains, and it continues to remain. And domestically, till we have this liquidity sorted out, I do not believe basically that the mid caps and small caps are doing very well, because they are the last guys to stand in the queue as far as liquidity is concerned. And if you are not able to get liquidity, basically, I don't think so you can do much in this market basically. So I think large cap is once again is going to be more focused on the large caps.
No, that's a pertinent point, and I think the last 10 days we've had more days of negative market breadth than positive market breadth, and underperformance from the mid caps compared to the large caps. So I mean the point is very well made. Nischal, how have you analyzed the moves taken to ease some amount of liquidity and the resultant impact on NBFCs? Now we know the first string of NBFCs, they are untouched, they are doing well, yes, but some of the others have some aid from the Reserve Bank and the moves around liquidity, and some of them have, like for example, we have this story on a BloombergQuint website which speaks about how Piramal has moved over from largely real estate to some bit of retail in order to get borrowings at a lower cost from global bond investors as well, and that is helping the company. Do you think a select set of string 2 NBFCs might maybe benefit a little and might find investor interest?
It's very difficult at the moment. I don't think so there is much happening. I've heard several calls basically in this current quarter. Yes, there is liquidity, but there is this fear basically which still continues to remain. So I think people who are I think the system is awash with liquidity, but the case of taking calls or taking more risk is not there. So I think a risk aversion still continues to be very, very strong. So you talk to any of the NBFCs, basically most of them have actually degrown their books. And in that kind of a scenario, I'm talking about the wholesale guys. So in that kind of a scenario, basically, I don't see this improving in a hurry. So at least I was on a call of a few of these companies. They're talking about next 1 or 2 quarters. They don't see any strong visibility. We have not the sector which is most stressed, which is real estate. I don't think government has given any sops as far as this current budget is concerned. So I don't see any liquidity improving out there. So yes, some of these guys will move into retail, but it's very, very marginal. You are saying on a base of 105%, they able to sell their assets down and move into retail, which is fine basically, but it doesn't move the needle. So I don't see there is anything happening in a hurry.
Okay. Nischal, what's your assessment of the telecom space now? All three of them have started to cough up the money and start depositing part of the AGR dues. What do you think is going to happen now, and what are the prospects for some of the larger players? Do you feel that it's going to primarily continue, and the thought process of this becoming a duopoly is moving in the right direction?
So as far as the consumer is concerned, I would have wanted three of them, but I believe now I only think two will survive, and the third survives also. I think it will be a very, very small marginal player. So I think this is good time for both Reliance and Bharti.
Okay. Nischal, there is I'm not asking you to comment on specific names, but there's a large restructuring that has been announced in a media entity. That sector has been in doldrums. Do you reckon that these technical issues notwithstanding, it's best to avoid, because if the economy is anyways not really looking like going up, then ad rates by and large will not necessarily pick up?
I agree with your analysis basically. I think this is more of a consolidation specifically, which I see within that whole thing. There is some cash which is lying around in the two cable companies. I think that needs to be utilized in some other way. So, and if you look at Network 18, had got a large debt. So I think this consolidation is actually trying to bring down debt in the group. I don't see any other thought process behind this. Because historically, and one, I am not very sure basically whether this consolidation will be allowed, because I think that 20% of a broadcaster having more than 20% in distribution company also, that I believe the law is still there. So we have to see how the whole thing goes through. But I believe that this is largely a consolidation thing, nothing that they are trying to create, or maybe just trying to create a bigger entity.
Okay. Got that. Nischal, it was great chatting with you this morning. Thank you so much for joining in. And the markets are looking weaker. We're now at 11,980, down a good 0.5% on the benchmark indices. Nifty banks down 167 points. We're going to take a very short break, but coming up next, a special conversation with Nimesh of ICICI Prudential AMC on mutual fund investments in these changing markets and regulatory conditions.